Hello and welcome to episode number 38 of Zach's Tech Talk Tuesday. My name is Ryan McQueenie, and on this week's show, we will be taking a deeper look at Facebook ahead of its upcoming earnings report date tomorrow, April 25th. Listeners will remember that we took a brief look at Facebook in the context of the broader FANG group last week, but today we're going to be doing a more in-depth preview just for the social media behemoth. Still, we're going to be using the Zach's non-financial metrics consensus estimates, or NFM estimates for short, just like we used last week. Those Zach's consensus NFM estimates contain detailed estimate data for business segment metrics and non-financial metrics reported by companies. The data is acquired from digest and contributing broker models and includes the independent research of several expert stock market analysts. But before we do that, we of course want to keep in mind the Cambridge Analytica scandal and the broader public conversation we have been having about data privacy. The issue has really had an effect on the analyst sentiment surrounding Facebook, as we have now seen 5 negative revisions to the company's EPS estimates for the current fiscal year over the past 2 months. The Zach's consensus estimate for the company's overall 2018 earnings has slipped 8 cents in that time, likely because of those downward revisions. Despite this negative revision activity, the stock is still clinging to a Zach's rank number 3 hold and might still be a decent growth option, with our latest consensus projections calling for the company to post adjusted earnings of $1.36 per share and total revenue of $11.46 billion in the soon-to-be reported quarter. That's the quarter coming up in Wednesday's report, and that would represent bottom line growth of more than 10% and revenue growth of more than 40%. But that's just kind of part of the picture. As I said, we're going to use the NFM consensus estimate file as well. And of course, one of the most compelling figures in any Facebook report is the company's monthly active users total. Our consensus estimate calling for Facebook to post MAUs of 2.2 billion at the end of the quarter. That would be up about 13.4% from the 1.94 billion it ended the prior year quarter with. That's relatively in line with, but slightly lagging the 14.5% user growth or monthly active user growth rate that was posted last quarter. Facebook ended Q4 with 2.13 billion. Another thing that investors will likely hone in on during Facebook's earnings announcement is its average revenue per user figure, ARPU for short. This gives investors a better idea of how well Facebook is capitalizing on each individual user, and steady growth in this category will become even more important as user growth eventually plateaus. Now, ARPU has also emerged as one of the company's most exciting growth catalyst because of its shift to a video focus over the past few years. Advertisers willing to pay a bit of a higher premium for what are considered better video advertising opportunities than just the traditional banner ads. ARPU for the quarter is expected to come in, based on our NFM file, expected to come in at $5.29, and that would be up about 25% from the $4.23 witnessed in the year-ago period. However, that is lagging the growth rate of 28% that the company posted in the previous quarter. And in overall, Q4 average revenue per user was $6.18, so also down quarter over quarter. Now, the last thing I want to highlight here is growth in the company's Asia Pacific region, which has been one of its fastest expansion catalysts recently. According to our NFM file, Asia Pacific revenue is expected to come in at about $2.02 billion. That would be up a staggering 46.4% year over year, which again is a very exciting growth rate, but Facebook investors are going to hope that the company can outperform that mark, especially considering that it was looking at growth of nearly 53% in this category last quarter, with revenues coming in at about $2.06 billion. So our consensus estimate actually calling for total revenue in this region to slump quarter over quarter. I think the key story for Facebook, in addition to all of these line items and segment metrics, is going to be what the company says, both in its earnings release and investor conference call. We've had obviously quite a bit to digest from Facebook recently, especially with CEO Mark Zuckerberg testifying in front of Congress. Of course, the response to this Cambridge Analytica story very recently has been, in the public spotlight. But earnings reports are an opportunity for the company to speak directly to investors and analysts, and typically we get a little bit of a different tone. So I think what we'll be looking for from our investors' perspective is plans in terms of things that will have an impact on the bottom line. So we know that the company wants to spend more money to prevent these issues. So how much are we actually talking about in terms of increasing headcount or just increasing overall spending to prevent issues like the Cambridge Analytica scandal? Does management think there's any sort of regulatory pressure coming in the near future? Those are the types of questions that I expect analysts on Wednesday's call to be asking management, and it will be very interesting to hear what Mark Zuckerberg and the rest of the management team has to say about those issues. Obviously, and we've talked about this on the show and on other shows that I help out with here on Zacks, this is kind of a twofold issue for Facebook. It's an issue from an investing perspective because when we talk about increasing costs and increasing headcount, those are things that are going to have an effect on profits. But it's also an issue from kind of a ethical, philosophical perspective. And one educates the other, certainly, but the public at large upset with Facebook for a platitude of presumed or alleged kind of abuses of privacy. And so the brand name being impacted, the reputation being impacted is also something to be concerned about here. And, there is a possibility that the public perception of Facebook has been shifted so much that we do start to see it have an effect on things like user growth and whatnot. Obviously, still looking for double-digit year-over-year user growth in this quarter, but it will be definitely something to keep an eye on. And try to stay away from making any completely definite stances ahead of earnings reports, just because things can be relatively unpredictable, especially with this kind of unknown volatility. However, I would say that the tone coming out of Wednesday's report is once again going to be one that's focusing on these data privacy concerns more so than anything else, and that's probably rightfully so. So definitely keep your eyes on that in the lead up and then immediate aftermath to Facebook's report. We at Zacks.com will certainly have all of the previewing and reviewing that you, the everyday investor, needs. So make sure to check out the site for all of that. As a reminder, if you feel that we missed something or if you want us to cover a different story, feel free to shoot us an email at podcast@Zacks.com. Make sure to check out all of our other audio content at Zacks.com/podcasts. And remember to subscribe and leave us a rating on Apple Podcasts. We are also available on Spotify, finally. So if you consume your podcasts through Spotify, you can now find us there. Just search Zacks Investment Research and we should pop up. As always, thank you for listening to Zacks Tech Talk Tuesday. We will see you next time.